Ladies and gentlemen, welcome to the Fintech Frenzy. Really do appreciate you guys waiting just that extra minute. Need to get myself a room temperature cup of Joe. Late as usual. Yep, late as usual. But we forgive it. Okay, we forgive and forget. Selling all my SoFi shares because Tanner's late. That's all right. That's all right. So the SoFi fireside chat was today, and you know what? The company's doing well. Now there were a couple things. We're gonna go through everything, okay? But there were a couple things that were kind of blanket statements that I'm just sort of sick of. That I wish they would give a little bit more in-depth answers to, and that usually presides around the technology platform. Wish it was a little bit more in-depth. Is what it is. All right. That being said, some different answers that they gave around the bank, around their lending was very cool. So I mean, I don't really have much to wait on. I guess we could just start jumping into it, but I only have a couple viewers here first minute in, so why don't we just relax here for a second? Wait for some people to pile in, then we'll get into the statistics. I can go through a different company's things, however, just real quick, and that is that NuBank finally dropped a piece of news in just the last, and they haven't over the last 2 weeks, and that's the fact that they've now reached 2 million active insurance policies in Brazil. They partner with Chubb, that company that Warren Buffett just acquired. So very cool. Love it. Add that on to their, multi-million clients in Brazil, 100 million clients total, 4 million active small businesses. You're going to see them, like, if you want a company that has that dual-sided commerce, the ability to have merchants and both customers on their platform. So you're really looking at I was going to say Shopify because they have Shop Pay, but even that, you're really not quite getting the full potential of the customer on your platform. You don't take deposits, that sort of stuff. But you have Block on both sides, Cash App and Square. You have PayPal on both sides, PayPal, PPCP, Venmo business accounts. And then you have NuBank. I mean, that's going to be another massive pick there for people because 100 million users, 4 million small business. That's pretty freaking huge. As large as PayPal is, they only have 35 million active merchants. And so if NuBank can continue to just wait it out, or not wait it out, but just do what they're doing, grow, we're going to see some pretty interesting things. And they continuously rolled out new features over the last little bit for high income users. So we'll have to see what the monetization is on those higher end users, or what they call high net worth, and then super core is that sort of mid between that a middle class high income sort of range. Interesting. Okay. Noto dishonorably discharged from West Point. Defund Noto. What's going on, Toto? Toto and Noto are not seeing eye to eye. I think he's just joking, but we saw some pretty interesting things. Stock actually for SoFi up just a little bit as the day closed out. Robinhood was up over 2% today. We saw a lot of great reactions today in the market, especially around fintech, especially the ones that were sitting around any type of loan. Affirm kind of saw a double bounce, they saw a big bonus due to the fact that people are still excited about the Apple partnership. And then you get the good CPI report that's just taking them to another area. 13+%, I think it was yesterday that they closed out on, then another 7%. That's very exciting. But the only problem was that whenever JPOW came out, they were like, oh, you know what? We're not cutting. We're going to push this off a little bit longer. We haven't really changed our long-term rates. That's the only problem. All right, someone kick this Shlomi guy. He's just pumping his shit coins that no No one buy that coin just because he said so. Okay. No one buy that trash. Okay. So let's get into some SoFi. Finally, we heard from SoFi's management. We haven't heard from them in some time. Press release has been quiet. Their media tour has been quiet. Media tour, right? It's a public company, but it's essentially the same thing. And for the first 10 minutes, he was going on his regular spiel. We're creating the AWS of Fintech. We're replacing large banks. We have great relationships with institutional buyers for fixed income products. Love to hear it all. Then he started getting into some details that I like to think about. So one of them, he said, we're in RFP discussions with many of the top US banks right now. We're in RFP discussions with many of the top US banks right now. Not one, okay? Not one and then a large regional bank. So this is kind of where we were at before, but you're saying many. So it'll be interesting to see if that actually ends up getting closed out. He said, 3-4 quarters just to get figured out who the actual, supplier of these, like for the financial infrastructure is going to be set up, whether that's Technisys or whether that's going to be another provider. And then you have multiple quarters after that in terms of actual implementation. And then probably a little bit after that until you start seeing real revenues flow through the business. So the new money that we're actually seeing on the platform is from deals that have happened quite a while ago. But that also means that the deals that they have been talking about, we should still see that sort of growth from a little bit before that. Tevis, get out of here with your freaking sports betting, okay? You better go play some chess. I'm catching up to you, bud. You have no idea. Guys, this is not a chess channel, but I'm doing good. I'm doing freaking good. My ranking has increased over 230 points in just the last 30 days. My elo is it's nuts. Challenge me so you can lose live. Oh, dude. Yeah. Look at the big shot, eh? A 1500 elo trying to strut his stuff here. I'll do that for a queen sacrifice. You take your queen out and I'll do it live and I'll beat you. That's a fair trade. Okay. Next, there was some amazing conversations about them. Actually, I just put out a video on this, so you guys can check that out after. But Dan Dolev said, hey, you guys are really reaffirming this idea of 55 cents to 80 cents of earnings per share. Now, the most amazing part about earnings per share is that it's inclusive of dilution. Okay, earnings per share has become the hallmark of sort of showing off how much money a company can make, rather than just the billions or millions of dollars that they're bringing on, because of the idea that you could be bringing on a ton of net income while also doing what like GameStop is doing equity offerings, and which are great, but it's also taking away from their shareholders. Their shareholders have less of the company than they did just that little bit before. The company looks like it's got a strong balance sheet, but you paid for it. You donated, So GAAP EPS is inclusive of that. SoFi has definitely diluted in the past. If you look at just whenever they IPO'd to today, their outstanding shares have increased roughly about 30%, from 800 million shares to 1.04 billion or something like that. Tevis says, no queen, let's go. Okay, so Tevis, hold on. I got a show to do. If you want to jump on and share your thoughts, and then we can get into a no queen chess game, I'd absolutely love to. I'll send an invite, and then you can decide if you're man enough to come on no queen and try to play me in chess, because I've been playing, dude, so good. So good. I've been looking at some of my games lately, and it's like, oh, you played as a 1700. I'm like, like I want to be so good at that game. All right. It's been like, honestly, if you guys, this is too much information, it doesn't matter, but I've always had a hard time with like games and stuff like this, or anything that like could potentially be a small portion of my life. So I used to play video games all the time, but I'm like, I'm not going to be playing this 10 years from now. So why am I playing it now? It's a waste of my time. But that's why I really got into stock market investing, because it was like a video game that I could get really good at and also play to like Warren Buffett's age if I live that long or however long, and just try to get better and better at this game until I die. And chess is also like that. 10 years from now, 50 years from now, chess is not going away. I can get good at it. B-dubs, you can add me, man. Send me your chess.com name and I'll add you for sure. But the nice part about insider ownership is they're much less likely to dilute. Exactly, Shane. That's another great point. All this buying from Noto makes it almost less and less likely that he's going to dilute further, because he's only going to harm himself. So it definitely comes from a place of, he will want to do what is best for his own money as well, which might be to acquire Technisys, to do a convertible note. Like, just because you're diluting doesn't necessarily mean that it's negative to the total share value, right? You could be taking it down, but if the benefit over time is greater than what you've given away, then you're still positive on that total value. I'm watching the Mavs game. Pfft. He's a quitter, guys. My portfolio is literally just a high score I'm continuously trying to beat. Exactly, dude. Okay. Let's see here. Let's go back to the fireside. Back to SoFi. I don't know how I'm going to end up putting markers on this video, like chapters, if you guys keep distracting me here. So yeah, many clients in RFPs. I thought that was exciting. They're targeting customers much bigger than they ever have before. It's exciting to still see. And they also said that they're not just in talks with the US banks, but also very large Latin American banks. We've seen them close on some of those deals. Be exciting for them to continue. No, they're not going to get any sort of NuBank deal. It's not going to happen. I don't believe it. NuBank creates all their own tech. So, yeah. That's like Apex Fintech trying to get Robinhood. It's just not going to happen. They talked about primary banking relationships. About a week ago, we spoke about this. The primary banking relationship is by far their most important clientele. Okay? I hope and pray next quarter, or maybe the one after that, hopefully you guys do it next quarter, show off the number of actual SoFi Plus accounts that there actually are. Okay? You show off shit like SoFi Relay that doesn't make any sense. Okay. There are some products that I want to see numbers on. SoFi Protect. I want to see the total amount of SoFi Plus numbers. Like that one's so important. SoFi Relay, that's all great, but let's sort of break things down even further. Let's see how much options volume there is versus equity trading. Crypto would be in there too, but not anymore. So a little bit more details would allow investors to run wild and be able to project growth even further. So for the primary banking relationships, they said, yeah, we are going to want to see more growth here, and you're going to see a bunch of other things come alongside that. So one, they said about 30% of our users get a second product in the first 30 days. Crazy. 50% of those users, not 50% of 30, 50% of the original. So of the amount of people that come on to SoFi Money are choosing SoFi Plus. I wonder what percentage of those people are of that 30 that are actually cross-selling, because I bet you it's the majority. I bet you those are the clientele that are cross-selling much higher. Okay. They also said interchange spend is going to continue to grow. Like it's skyrocketing right now. I think it went up 20 something percent or 18%, something like crazy like this, just quarter over quarter. And that was from holiday spend to Q1 of 2024. Interchange spend is like spending with debit cards, spending with credit cards, the total amount of money that's leaving, but leaving in a way that makes you money. Transfers off platform are a null and void transaction. You going to a terminal and tapping that card makes SoFi money. Okay, that's where we want to be. So, um, ba, ba, ba. Okay, then on lending, there was some pretty exciting things. One, they said they're now declining 80% of loans. So we knew 70, then they said 75, now they're at 80% of loans. That can sound bad, right? That can sound like, you know. So how do I word this? The customers who are applying to SoFi want a loan from SoFi, or they want a loan in general. The amount of people that we take versus how much we decline, or like the total amount of originations are not at all, you know, hurt by the amount of applications unless you're literally accepting 100% of applications and still not hitting your origination goal. Originations is the amount of money that you're lending out, by the way. So if there's $4 billion of originations, you've taken $4 billion of your dollars and dispersed it, whether that's $20,000 checks, $100,000 checks, to the people who want those, those loans. So, they are declining 80% of the applications, which means they are so frothed with demand that if there is a day where rates seem more likely to come down, which today seemingly was one of those days where it felt like that was going to be today and then it wasn't, but they will have the option to turn that tap on. They literally said so. When rates start to come, the floodgates will open for student and home loan business. That's freaking exciting. Like right now, student loans are not a very viable type of product because the actual federal or the publicly held loans or the government loans for student loans are very well priced comparatively to what SoFi can offer for a profit. Okay. So it's very hard to try to get someone to say, hey, kid, come over here, come, take this loan. It's not worth it. Okay. If they're offering 5%, then we can get down to 3% or something like this. Then people are like, all right, well, I'm going to save a lot of money over time. It's a 10-year loan. Great. There's a coupon rate that I'm willing to sacrifice there. Most of the loans that SoFi is still signing on for student loans is them saying, hey, we know that the governments are willing to give you this rate. We're actually going to give you a rate that's just slightly higher than that, but we're going to extend it over 20 years. So you're actually having to pay less, but it's at a higher coupon rate. So they're going to be paying more in interest to SoFi rather than paying off the principal of their loan, but it's at a more affordable rate that people can spend on a monthly basis or bi-weekly basis, however they want to do it. So that's great. For home loans, yeah, once again, as rates come down, it makes buying a home a more affordable investment. So you're going to see more demand there. That's across the board. That's not a SoFi feature. That's a financial services feature. And then personal loans, they're just risky. That's all it is. We're perfectly ripe for demand. People want them. They have extremely high credit card debt, and we can lower it for them with a personal loan. Having 80% of people turned away means that the 20% of people that we've picked are the top 20. Okay. That means we're going through and we're saying, hey, we want the best income, the best FICOs, the best jobs, the stickiest deposits, everything. We're going to give them to members who are only SoFi Plus users, whatever. Okay. That's the very exciting part of having higher declined loans. Bring it up to 99%. It doesn't matter. Like the application costs SoFi nothing. It's the actual originations and then the losses on those loans if anything is to go bad. Speaking of which, what they ended up saying was that they still are holding up the 7 to 8% life alone losses, which is still the benchmark. And they said, we're actually seeing some pretty good improvements on our latest cohorts. So where it got really bad was about Q3 of 2022. They said our new loan cohorts are 20 to 40% better on a life alone loss basis than Q3 of 2022, where even then it was not even at 8%. So at their worst, they still weren't as bad as what they're projecting right now. And things are actually looking better. So yeah, very positive there. It's just a matter of the fact that the pipeline for news is just not, it's not streaming out. There's no new products coming out. And if there are, they're not telling us about them. That's the only hard part. It's like holding a little bit of a black box, but the Palantir investors will know exactly what that feels like, and they've been happy so far. That doesn't mean that it makes for a good company, by the way, just saying. But they have triple beaten every single quarter. And if that continues to happen, that long-term guidance that they have to 2026 being a being a top 10 financial institution by market cap, whether those are achievable goals, let's just say that the 2026 guidance one ends up happening. This stock is going to make great leaps and bounds in terms of their overall profitability. And what happens as shareholders if SoFi stays at $7 during that time of explosive growth? What happens? Everyone gets sick of holding SoFi at $7. What if it stays at $7 between now and going out to 2026? Buybacks, dividends. If they have more money and they don't know where to put it, or if they still see a lot of opportunity, they might push that date out till 2028, till 2029, whatever, right? But then they might have a greater chance of acquiring more of the market share, get on more accounts, bring on more money. Like the growth rates might stay up if they're using that capital to continue to grow. But eventually, if a company is not loved, they don't need to be. Do what PayPal's doing. Hey, no one wants to buy us? We'll buy ourselves. What is it? I always get the name wrong. Is it AutoNation? AutoZone? What is it? There's a stock that I think the statistic is that they've purchased back 97% of their own shares, and the stock has crushed the S&P 500. Someone remind me of that story. It's been a long time coming, but it was a great long-term hold. And that's because it's an underloved company. Oh gosh, Mark. um, I don't think we're going to get a rate cut this year unless the wheels fall off the economy. I mean, I definitely think we get a rate cut this year, but yeah, not many. That's for sure. Is it AZO? AutoZone, 89% purchase back shares since 1998. Yeah, I think that's the one I'm thinking of. That's freaking, what an incredible story. Let's look at the stock here. Yeah, holy crap. I wish I could. The thing I'm looking at is only giving me 5 years and then like max, which is all the way back to 1991. I want to see it from a 10 and 20-year perspective. But yeah, they just said, hey, no one's buying us. That's perfectly fine. We'll buy ourselves. And the shareholders that did continue to hold on have been very well rewarded. Which do you consider more risky? Sigig, you always have these questions that are like putting me in weird places. I would say shift 4 right now because it's just information risk. I just don't know everything about the company. Um, so I'm much more comfortable holding SoFi. But yeah, get in the zone. Get in the auto zone. Most risky is betting on a South American bank. Yeah, I mean, South American bank that's 3x, almost 4x my money. I don't know. The risk reward is seemingly paying off. B-Dub said he sent me a chess.com link. Here, let me see what your rank is here. Where'd you send it? On X? Or you send it right on chess.com? I don't see anything on either one of them, but whatever. I'll find it later. AZO is a great success story. I don't see that with SoFi. Well, no, like I'm not actually saying I see that with SoFi. What I'm saying is that if a company has a very low chance of bankruptcy, then most likely that your exit is better than par, if that makes sense. Like what I'm trying to say is either if they don't get the premium that they want, but yet earnings continue to grow at the way that management is saying, then essentially they could bring in 8 cents in 2024 and then 80 cents in 2026. That's a 10x in their earnings, inclusive of dilution, whether that's through buying shares down, that won't be the case, or continuous stock-based compensation, a potential acquisition, something. If those are your EPS targets, that's unbelievable. So yeah, they like shareholders could be rewarded from a premium on acquisition. Shareholders could be rewarded through dividends or buybacks, but people are worried that um that you sent it to me through email. He said email, email, email. I only play Blitz. Okay, man. um but yeah, so shareholders will be rewarded if earnings go up. That's all I'm trying to say. People can get frustrated whenever the stock's not moving intra-quarter and that we get no news or something like this. And to some design, whether that's fault of management not coming out and being more active or the fault of investor relations teams not being allowed to share more information about the company, I don't know. That is where you get premium on a stock, which I think that SoFi deserves. They've had execution credit. They're considered innovative tech, in my opinion. I think that they deserve a multiple on their premium or on their market cap. But yeah, we're not the only ones watching SoFi's potential 10x on EPS. Institutions don't want the risk of interest rates. Once we start cutting, the stock will explode. I mean, that is true, but what is risk of interest rates? Are you worried that there's going to be another rise in interest rates? Like, what's the chance of that? Like, look at the Fed Watch tool. Let's see what people are betting on the idea that like rates get cut over the next couple months, they stay flat or they end up getting raised. Because the real risk of interest rates is rising interest rates, not holding interest rates. So is it not a bigger risk to hold companies with larger multiples? Because if you can look at this stock, you see a potential 10x in EPS, then that makes it a very, very cheap stock. The truth is Wall Street does not believe in that outcome. They have, on average, between every analyst on SoFi covering the stock, they have a 44-cent EPS for 2026. And the highest one on that list is 61 cents, which doesn't even break the midpoint of SoFi's expected guidance. You get what I'm saying? So they just don't believe it. I don't think that they obviously they do see the comments from SoFi. They're not dumb. But I don't see the risks in interest rates. Yes, it is a top 3 risk for me. Interest rates, unemployment, and competition. But yeah. Okay. Like, is it a bigger risk to hold Nvidia because you're paying a multiple, or Tesla, or any of those really like even Apple? Is it more of a risk to hold Apple? People would say no, but it's like, why? It's a bank. It's a bank, especially with a very good balance sheet. The risk of rate hikes is small, but still there. We've gone from 6 rate cuts this year to possibly 1. The fear is real, and the Russell 2000 won't go up until that's off the table. Yeah, I agree with you. I definitely think that it was more beneficial whenever 6 rate cuts were the case versus 1. But you're still playing in equities markets, and you're playing with the biggest names, and the biggest names that have already run. That's the only thing that I think is like, I get it. I get it, but what's the end game? Like, when does the risk reward get turned around from uh Nvidia, which is getting to a premium of like, yes, no, it's still cheap, but a lot of things have to go very right. And the opportunity for the stock to make a $500 billion turnaround, I think will be a lot quicker than it raises 500 billion. Not saying it's not possible. I have not sold a share yet, but I'm very close. But is Nvidia a safe house? Is Apple? I mean, people treat Apple as if it's a safe house, but it's like, yeah, it is until it isn't. It is until they just keep not growing revenue and the products become less needing to be replaced, and can't charge enough for them, and I don't know. I'm not saying Apple's going anywhere. I just don't know that those companies will always get the same level of premium as they're currently getting right now. And just that risk versus reward, like, how much do you think they're going to go up based on how much I think that they could possibly go down? I think just the risk reward for some of these super mega cap companies are just out of whack. I hate Apple products, but after seeing the WWDC presentation from Apple this week, I'm long and it's in my portfolio. Why? It means that they're in the AI play. Okay, so is all the other competitors around them. Like the companies that won't play a part will fall behind, but that's not going to be Google. That's not going to be Microsoft. That's not going to be a Samsung or any of these other players. I don't know if it makes their ecosystem, like, maybe there's more like vertical sale possibilities. Um, but I don't know if it necessarily means that means market share expansion or something like that. Um, SoFi is one of the safest banks. Oh, I don't know if that's true. Andrew says Nvidia hasn't even shipped Blackwell yet. $150 by December. Do you think that like in the price that people are not pricing in Blackwell sales? Just because you add a new product does not mean that you like, how high does the multiple get? So if right now the stock goes from, I don't know, I'll take some you know, uh, blanket multiple. If the stock goes from like 25 times PE to 30 times, or let's get really exaggerated, from 25 to 50 times price to earnings ratio of their trailing PE, then to get back to where the premium was, or the multiple before, then that means that you're expecting a double in earnings just to get back to 25. Okay, just to get back to where you were before. And then the longer you hold it, that earnings multiple will go down, as the amount that the company's making in the future will be more than what they're currently making. But if, like, how do I say this? Some of the work that's getting done is cannibalistic There will be market expansion and all of this thing. I'm not like, it's hard for me to choose my words with Nvidia because everyone's so sensitive whenever I talk about like stocks like Tesla or Nvidia or something like this. But you're sort of trying to find where the total addressable market is and then price, not to be uh like you have to price in future growth, but only to a certain level where you believe that it is still like fairly valued. That's extremely freaking hard in markets where you don't know how large the products can get. Then you have people like, that's how Kathy Wood gets these ideas that, robotaxi will be $1 trillion+ markets in 5 years from now. It's like, it's unbelievable. B-Dub says, I'm going out on a limb here, a long, thin limb, that the market is a top today in the for the S&P 500. You think they put a top in today? I don't know. Yeah, we did website traffic. Bernie, we did a website traffic video last stream yesterday. SoFi's website traffic is actually down month over month. So I think that B-Dubs is right in the idea that you can't just continuously have a hot hand fallacy. The idea that multiples are continuously rising, that can't happen. And especially with some comments of like, Nvidia is going to 150 because of Blackwell. Like you don't even know who the buyers are of this product. You're just saying, like, look how good they did with this one product. Now we have a much better, faster, more expensive product coming out. So then that's going to see its wave. And then they have another product planned after that. I don't think it works like that. Yeah, things get priced in. Future growth gets priced in. And future growth can get like exasperated. Okay. And the more of a premium that you put on a stock, the more chance that like the greed and fear scale that you might actually be more on the exaggerated scale than you are on the underside of it. And I think it's okay to wait just a little bit just to see where AI goes from now rather than a couple of shitty assistants on X, Google, and Microsoft for the next wave for people to put larger investments in. And I'm not saying that Nvidia won't grow. I'm just saying for Nvidia to continuously beat people's expectations, there needs to be outsized growth. So I'm thinking more about my exit than I am about adding. The people adding here, I mean, what are you guys doing? That's how I think. Because I'm like, what's your upside versus what's your downside? You're wanting a 30% upside and your downside is 50%. It's just so weird to me. Think about the crack that Salesforce got. Like an unbelievable company. Salesforce is an unbelievable company. To bet against Mark Benioff is there's never been a cycle in innovation where he hasn't been a forerunner. Okay. Every single new step of innovation, he's been there. Then they did the tiniest miss on revenue because they haven't done it in decades. And the stock went down like 20+% on that day because they've never done that. So there gets to a point where it's like, I don't know. I don't see Nvidia crashing 50%. I don't know. Uh, Mark sold off all of his Nvidia shares and 75% of his Tesla. I cannot believe you sold 75% of your Tesla after ARK said that, you're buying into this multi-trillion dollar robotaxi industry. We should do a video on that. Maybe I'll do that as my live tomorrow, because it's like I usually don't talk about that and we're mostly fintech, but um maybe I'll just get into more broader tech talks and just shove it down your throats, because I don't know. I'm not saying Nvidia is going to, I wouldn't be holding on to it right now if I was risking like 50%. I'm just saying, like, I also don't think a 30% rise is all that likely. Um but I do believe that the stock has more downside than it does upside. And that's whenever I think, okay, well, I should rotate some of this money into things that I think are better risk reward, which is smaller cap. See, like, even with really big stocks, like one of the things that Steve said, I was listening to him earlier today talk about Tesla and the multiple that they put on large companies like Apple, Meta, Facebook, or sorry, Meta, Microsoft, uh, for like, the amount of money that those companies are actually generating versus what you're paying for it, is like, you also have like concentration risk. So if you're going to buy the S&P 500, do you want to buy the S&P 500 or do you want to buy the S&P 5? You know, I think that people will really start to realize that that's not the play that they want in their portfolio. Because tech is cool, tech is sweet, but and like, I'm a super fan. Okay, don't get me wrong. I'm just having a thought. Like, just these are thoughts. Um, that at some point, if these companies are making such unbelievable swaths of money, that regulation is going to play its part. Come here, climbing all over my desk. What do you got to say for yourself? Did you guys hear that? Nvidia accounts for 40 to 42% of S&P gains this year. That's not sustainable. Well, it's not sustainable if it continues, right? If that stock has another 30% run or whatever, if it goes to 150 or whatever. Cat's name is Lincoln. Um, then no, that's going to be too much. Tanner's a growth fan. Tech equals. I mean, I do think of it that way. Tech, to me, in my head, is growth. It doesn't mean for all things. I don't look at Cisco and say, "Oh my God, what a growth company." But first time I have more than 20% cash since 2020. Huh. I don't know. Yeah, it's a lot of cash. People who want, I think he means wait on the sidelines instead of investing will fall behind. Predicting a crash is just dumb. Um, Convinced this chat is stupid. Diversify in DCA, folks. I mean, I agree with you, but whenever you say diversify and your diversification is very concentrated, then are you diversifying? I don't know. I definitely don't think that the chat is dumb. If people differ from you and you go, oh my God, this doesn't fall into the one rule that Warren Buffett said that even he breaks, then everyone's dumb. It's like, oh my gosh. I'm up 50% year to date. See big green, take big green. I disagree with that. That's why I haven't sold my Nvidia. I think that, and I have like I don't know if you guys know the story like very well, but I'm not going to account for split because it's just going to have like ring my head. I guess I could just take a zero away. So I was buying Nvidia like roughly around like a little less than $5 a share. And then as it went up to like 15, I was like, holy shit, I made my bag. And then I started selling. Well, no, that's not true. I sold about like at 100 and then kept selling all the way to 150. And then like, I was like, holy crap, this is a lot more than just gaming and crypto. There are like AI is becoming a very large thing here. And then I stopped selling. And now we have gone like this massive stretch. And it's still by far the best investment I've ever made, but it could have been so much more. So I don't agree with the idea of, make big green or see big green, take big green, as Mark says here. If I had invested a quarter into BTC 1 year ago, is that dumb? Not necessarily. I just find it very hard to do that. It's like a hard thing to do, in my opinion. Some people have the stomach for it. I mean, I'm not Keith Gill, though. Like, I can't say, oh my God, this one thing is going to work. I'm going to pour everything into it and I'm going to get a return back. Like, you are a news article, like a CEO getting hit by a truck away from your life savings gone. Not gone, but severely hurt. That's hard. So I don't think I'm going to get out of NVIDIA because new things can happen. Long term, NVIDIA will continue to, to be an amazing company. I've said for multiple times that I do think that in my lifetime, NVIDIA will be a $10 trillion company. I actually believe that. But I also don't want it to be 100% of my portfolio. As rich as that would make me, I I just wouldn't sleep. I'd get cold sweats at night thinking, what if something went down? And I see that with people. And honestly, you guys are doing that to yourself. People read the news and they play all these options and then they like, I don't know. I don't know. You got to live with yourself. Like this can't be a game where it hurts your actual like I don't know. I don't know. I feel Nvidia will have dividends. Well, you can get them today. um oh, can I tell you guys a little something? So I'm taking a page out of the Graham Stephan book of investing here, or some of the other frugal guys. B Dubs does not agree, so I'm not going to get him stirred up. But I own a house. That one, that one right behind me, uh, and it's just me and my girlfriend here. I enjoy it, but it's a 3-bed, 3-bath. There's not three of us. We use one bedroom. I'm in another bedroom. It's the smallest one. It's like a crib room or whatever you call it. So it's small. Use it for an office. But then there's one on the other side. Very, very big closet, big everything. I'm not using it at all. Right now, it's where my girlfriend does her makeup. Okay. What do you guys think about the idea of doing Airbnb rooms, doing private room and renting it out to make a little bit of income on my asset that I already own? I'm paying the mortgage. I'm living here, but I don't get any dividends. Where's my dividend? He says, I've got a I think he means bedroom. And it's just my girlfriend and I rent out my rooms. Perfect. So Z Stacker, are you doing that on Airbnb? Would do month to month for nurses? Yet. 9. Hell no. But have you guys done an Airbnb? Because I think everyone's worried about like getting like killed in their sleep. But it's just so not the case. Even if they like break a plate, like they pay for it. What's so wrong about Airbnb? What am I missing here? I do not. I rent to girlfriend's friends. So that was the original plan. My girlfriend had a friend that I wanted to move in here. That would have been great. She didn't even own a car, so it wouldn't even take up a parking space or anything. But then something like, it was like the craziest story. Right before she was supposed to move in the day that we moved in. So then we were just going to, like, we wouldn't get used to the space. That was my idea. And then her boyfriend's mother died like a month before we moved in, and then they inherited the house. So, nope. And I don't like the idea of like doing like interviews for a renter or anything like that. Like, I don't want anyone close. I'd like, or someone that like, this sounds weird, but I don't want someone to like get to know me. I just want like someone to already be vetted, be liable, held responsible, and out in a short period. So if it is a bad thing, if I don't like it, it's not a year, it's maybe a few days. And then, yeah, but like you guys are saying, like I can just do nurses, I can just do young professionals, I can do whatever I want. And I'm not looking to like maximize my stays. I'm just looking for a little extra money. Tanner's having financial problems. No, it's just like, I just think, why not take the extra money? I have the asset. It drives me nuts. Like, so I've got a garage, but I don't use it. We park 2 cars outside the house all times. And I'm like, why would I, like, it bothers me that garage is doing nothing. It actually makes me angry. So I've looked up like, okay, well, does anyone want to use it as storage? Like, where's the money? I want to find the money. And so here, I'm like, all right, there's 3 bedrooms. There's this other bedroom. I don't want to accommodate them. I don't want to offer breakfast. I stay out of my way. I'm going to close the office door. That's fine. But money. What about kitchen uses? Won't you bump into them? Yeah, so a little bit. And it might not be worth the headache. I don't know. Like, I've thought about some nightmares of like my door here while I'm streaming, and then they like walk in, or like a random Airbnb person, that would be like the second that happens once, I'm never doing it again. But yeah. Tanner, do you want some dude at your house with your girl when you're not home? So the truth is, I'm always here. I know that's kind of like pathetic, but like I am such a homebody. It's going to be the dude who's worried about being here with me alone. She's got a life. She goes into an office and has a real life. I work here in this chair. You guys making fun of how pale I am. Well, now you know the reason. You know? Do the live stream with a random streamer. Well, I mean, like, yeah, who knows? Maybe I bump into some financial guy. Tanner Manson milk bags the guy, no problem. What the fuck? They're gonna drill hole. Like, this is the craziest. You guys have the worst. I'm not gonna accept random people. I'm gonna accept the people with like more than 5 Airbnb stays that are all 5 stars. Great guests, lovely, cleaned up after themselves. I'm only gonna accept those people. I'm in a pretty freaking good area in Canada. I'm near Toronto. I think that I can charge a premium. It's a nice place. It's not a great place. It's my first place ever. But yeah. Tanner, close out the show. Lurker, that's why you'll never be a mod, okay? No mod of mine would ever say close out the show. I'm having fun. Shut it down, buddy. Airbnb will do a good job of vetting them. George, that's what I'm thinking. We should all try to. So, legitimately, this is my largest fear. If ever I get a sign up who's from a viewer from YouTube, I'm never doing it again. I will never do it again. I love you guys. I want to meet you in the street, in a coffee shop, in a grocery store, not in my home. I'll never fucking want to meet you in my home. Tanner, how old are you? I'm 26. Tanner is 16 years old. No, I'm 26, which also, like, I also find, money made when I'm younger is better than money made when I'm older. So I'm going to take advantage of my comfort right now, make some extra money, have some fun with it. Yeah. Tanner, write a will. I have a will. Just Amit staring at you, cowbell in hand. I'd let Amit stay. So I swear to God, this has been the case. I have brought up the idea of Amit and I having like a streamer house. Like, you come here, man. You're gonna set me on the right path. I'll have like we'll have streaming schedules that sort of don't cross stream, and we'll just end up having a good time. But obviously, I'm Canadian. He's American. I've got a girlfriend. He loves his parents, so there's some conflicts. Yeah. Streamer house, not a streaker house. He loves girls also. Yeah, he was saying all sorts of shit about my girlfriend that it was. I mean, if you see this, man, that shit with the LinkedIn page was too funny. I think about it a lot, actually. Me and Steve like to laugh about it. Tanner sounds like Gen Z today more than ever. I am Gen Z. The worst generation in all of history. That's what every single this generation today won't ever survive. Multiple generations before it. These people with their rock and roll music, these kids with their dubstep, all that shit, I'll be perfectly fine. I'm doing like I'm doing pretty good for my age. I'll be doing good. It's fine. He's a good kid, B-Dub said. Um All right, ladies and gentlemen, thank you all so much for watching. It has been over an hour. But what do we have for the rest of the week? I don't even know. I'll have to check the schedule. Regular fintech stuff. I might make a weekly report or something like this for large tech stocks, other companies that I hold, because I am actually a shareholder of Airbnb, Salesforce, we talked about today, Nvidia, Tesla, most of those very big names. So I would like to cover them more often. And I never thought I'd get views for them, but I have an Nvidia video on my channel and it's just starting to actually break out and get more views like today, even though I made it a long time ago. And so it's making me feel like there is a path to talk about more mainstream videos, even though I am a much smaller creator. All right. Thank you all so much for watching. Really do appreciate your time. But bye for now.